Now that you, as the accountant at Luscious Landscaping, have made all of the adjusting entries necessary to put the necessary revenues and expenses on the books in the same period that they were earned or incurred, we need to change over our trial balance because your financial statements have to be made after those adjustments are taken into consideration. There are different methodologies to doing this. I like the worksheet method, where on one side we have the unadjusted trial balance, and via our adjustments we turn that unadjusted balance into an adjusted balance. How do we do so? Well, what we do is we basically take whatever happened in our adjusting entries and we enter it into the adjustments portion of this worksheet. So back to the adjusting entries that we just prepared. In the first adjusting entry, we had a $350 debit to depreciation expense. Well, I'm going to go and I'm going to bring that $350 debit to depreciation expense into my adjustment section. So I'm in the adjustments column, adjustment section, the debit column. I want to have a $350 debit right here. For accumulated depreciation of equipment and truck, we have those listed over here. So those were credits in the journal entry. I want to put them in the credit column. Let's get the accumulated depreciation of equipment brought over, and it was 100. Let's get accumulated depreciation of truck brought over. That was 250. So I just brought those three numbers into my adjustments section. Going down to the next adjusting entry, we had a $200 debit to supplies expense. So I'm going to go in the adjustment section. It was a debit, so I'm going to go find supplies expense. And I'm going to bring that $200 debit over to my worksheet. The credit in this entry is a $200 credit to supplies, so I'm going to need a $200 credit to supplies in my adjustment section. 2 entries down. The third adjusting entry that we recorded had a debit to accounts receivable for $1,000 and a credit to service revenue for $1,000. Let's bring those things over to our adjusted trial balance. So I'm going to go and bring that $1,000 debit to accounts receivable into my adjustment section, and that $1,000 credit to service revenue into the credit column of my adjustment section. Moving on down the line, 3 entries done. Fourth entry has a $1,500 debit to unearned revenue. So let me go grab that first and bring it over to my adjustment section of my worksheet. Unearned revenue needs a $1,500 debit, so I'm going to put it in the debit column. And then the other side of this is a $1,500 credit to service revenue. Well, we already have $1,000 in there, which means that I need to add another $1,500 to the credit balance that we have going in the adjustment. So I'm going to go up to my formula bar, up at the top, put a little plus afterwards for what I already had in there, and go click on that 1,500 and bring it over. If we got 1,000, we're adding another 1,500. Now we're up to 2,500. This entry had a $600 debit to rent expense and a $600 credit to prepaid rent. Let's go bring those numbers into our adjustments section of our worksheet. $600 debit to rent expense and a $600 credits to prepaid rent. Getting brought on over. There we go. We have in this adjustment a $360 debit to salaries expense and a $360 credit to salaries payable. So let's go and put those numbers into our adjustment section. Salaries expense gets a $360 debit, while salaries payable gets a $360 credit. So I found salaries payable. I need to have it as a credit in my adjustments. And let's go click on that 360 and hit enter to bring it over. There we go. And for our last adjusting entry, we had a $40 debit to interest expense and a $40 credit to interest payable. So interest expense needs a $40 debit, and the debit column of the adjustment section for the interest expense row equals that $40 debit. To enter and bring that over. And then we had a $40 credit to interest payable, so interest payable, credit column, interest payable row in the adjustment section. And voila, we brought over all of our stuff. Let's make sure that we didn't do anything silly, like put something in the wrong row, because our debits and credits for our adjustments should equal. So this is going to be equal to the sum of all of the debits that we had in this section. That comes out to 4,050. And then over here, find the sum of all of our credits, and those numbers add up to 4,050 as well. So we have debit credit equality in our adjustments, which means now we just need to adjust our trial balance. Let's start with cash. Cash before the adjustments had a $16,650 debit balance, and we did jack with it during the adjustments, which means nothing has changed. Our adjusted balance is the same thing as our unadjusted balance. We can just go and bring this on over. For accounts receivable, it had a $2,800 debit balance before we made the adjustments, but during the adjustments we debited it for another $1,000. These are on the same side. They're both debits. When things are on the same side in this document, what you want to do is add them together and keep your balance on the side they both are. So we had a $2,800 unadjusted balance. We just adjusted it up by another $1,000 because accounts receivable, like all assets, goes up on the debit side, which means now our books should show, and they do, that people owe us $3,800 instead of $2,800. For supplies, this account had a $1,000 debit balance, but we had a credit to $200 for this account in our adjustments. These are on opposite sides. We have a debit balance, but a credit in the adjustments. Well, this is still an asset account. It should balance on the debit side because that's the side they increase on, which means this credit is decreasing the value of that account because assets go down on the credit side. So when things are on different sides, what you do is you keep the balance on the same side it was in the unadjusted trial balance, but you find the difference between the two. We had a $1,000 balance. We adjusted it down by $200. We now have an $800 balance, which going back at our entries makes a lot of sense because in that entry for supplies, we had $800 of supplies on hand, and now we've adjusted our balance so that the balance of that account is equal to what we actually have on hand. Same concept for prepaid rent. Had an $1,800 debit balance, but we threw it a $600 credit. Opposite sides, keep it on the same balance side that it was before, but subtract. Find the difference between the two. If we had $1,800 of prepaid rent, but $600 of it expired, we've only got $1,200 left. For our equipment and our truck, nothing happened in the adjustments, so that stays the same. We still have a $3,600 debit balance to equipment and a $26,000 debit balance to truck. For the accumulated depreciation of those two assets, we didn't have anything because they're new. This is the first time we're depreciating, which means treat it like it was a zero over here in the credit column. Our balance is now going to be how much we adjusted it for. We had a $100 credits to accumulated depreciation of equipment. It has a $100 credit balance. We had a $250 credit to accumulated depreciation of a truck, so that account now has a $250 credit balance. For accounts payable, that account had a $500 credit balance before we made our adjustments. We didn't make any adjustments to that account, so it still has a $500 credit balance. For salaries payable and interest payable, we had none of that on the books. It was a zero, which means the balance would be the same as the adjustment. We have a $360 credit balance to salaries payable and a $40 credit balance to interest payable. By the way, if you get one of these ugly little green arrows in there and it triggers you, you can always get rid of it by clicking on the cell, going and grabbing the drop down next to the thing and just telling Excel to ignore that error. There we go. Utilities payable, same thing. We didn't have to utilities payable, we had a $225 credit balance. We didn't make any adjustments. We still have a $225 credit balance. For unearned revenue, it had a $4,500 credit balance before we made the adjustments. And in the adjustments, we debited it for $1,500. It's a liability account. Liabilities go up on the credit side, which is why it has a credit balance, because all accounts should balance on the side that they increase on. But this $1,500 debit that we had, thanks to my little notes that I put next to the account names, reduced that liability. What we're saying here is we owed somebody $4,500 worth of work, and we did $1,500 of that work. So the amount that we still owe them has to be decreasing. So opposite sides. Keep it on the side that the original balance was, which is the credit side, but subtract out your adjustment. And now unearned revenue has a $3,000 credit balance, the amount of work remaining to be owed to this party. Notes payable and our owner's capital account, Reams Capital, did not have anything happen in the adjustment, so we still have a $12,000 credit to notes payable and a $34,600 credit balance to Reams Capital. Reams withdrawals had a $650 debit balance. Nothing happened to that account, so it still has a $650 debit balance, being very careful to put it on the debit side. What about service revenue? Well, during the period, we recorded $3,300 worth of service revenue, and therefore had a $3,300 credit balance to that account before we made our adjustments. But in our adjustments, we credited it for another $2,500. Same side, they're both credits. Revenue accounts go up on the credit side, so I'm going to add that in right there. If we had $3,300 before we made the adjustments, but during the adjustment process we realized we had to recognize another $2,500 in revenue, well, now we've got $5,800 worth of revenue on our books, and it's on the credit side because revenue accounts should have a balance on the credit side. For salaries expense, we recorded $2,400 during the period. Account had a $2,400 debit balance. During the adjustments, we debited it for another $360. Again, same thing, they're both debits, so we add them together and keep the balance on the same side. Now, in total, we're recognizing $2,760 worth of salaries expense for the period. Utilities expense had a $225 balance. We didn't have any adjustment, so it's still got a $225 debit balance. And then for our rent expense, our depreciation expense, our supplies expense, and our interest expense, none of those accounts had a balance prior to adjustment. And we adjusted them all with debits. So they should all have debit balances equal to the amount of the adjustment. And I'm just going to bring those all over. So same thing, before we go through the hassle of making our financial statements, we want to make sure our debits equal our credits. So let's find the sum of all of the debits that we have now that we've adjusted all of our accounts, and all of those debits add up to $56,875, and then I can go and I can add the other side. I'm going to use the fill handle to drag it over to copy the formula. And look at that. We have $56,875 of both debits and credits. For the worksheet, it's like a shortcut for the purpose of the assignments that I give you, not to make them too big. Your adjusting entries, just like any entry, would have to get transferred to the T accounts. So this is what the balance of your T's would be had I included the template for them. A lot of accounts can go into these things, and I'm trying to keep them not so incredibly long, but I know it can be confusing that I feel like I'm having you skip a step right here. In real practice, every one of these still has to go to a T account. And you would see at the end, if you had that list of T accounts, that the balance of every account is in fact equal to the adjusted trial balance that you have displayed here.